Welcome to the TMT special edition video on gold update. Well, we are getting that move lower that we anticipated. We've been talking about for the last couple of weeks. And if you play the GDX, the GLD, Nugget, Dust, however, the gold future contract, however your choice is, you did quite well. Our subscribers for $14.95, a bi-monthly updates on gold and on crude oil is something to take a look at, guys. It's cheap, and you'd pay that for the next 10 years if you just did the gold trade. All right, so anyway, what were we looking at? I'm going to give you a quick little recap for those of you who did not see the updated video. We said the commercials, which are the smart money, have been short at these extreme tops, and they added big time. So what that means is when you see the speculators adding to their tops, they're really the dumb money when it comes to that in general. You'll see that that's a market top. And when I saw these extremes, it was just a matter of time before the market started to pull back in gold. Now, the speculators, which might manage money and hedge funds, what have you, you can trade them because they are trending. They do take the long side or short side, whatever the index is, but you can follow them when you have a neutral state here. You see, when you have like nothing going on here, and you see, because remember the commercials are always going to hedge, right? They've been hedging all the way since February, right? So obviously you would have lost a lot of money if you followed the hedges, but you got to watch, because when you get to a point, these extremes, this is when you can make a lot of money here. And and you're not picking a top, you're just giving you a proper analysis work on what's to come. So they all reduced their bets on the short side, which is a good sign. How far does gold go, and how far does gold go until we get some sort of a stabilizing base area where we can start looking to get long gold? Okay, and that's the bigger picture. Gold is a better buy, but we're going to take a look at that now going into the. And if you're going to do any type of commodity, you want to take a look at what the dollar's doing. The dollar had a really, really nice move off the lows. And you see these extremes. They happen all the time. They get everybody short, and then it starts to explode. Where does the dollar go? Not sure. I'm not sure if it's in a big new bull market, but 95.53 will probably be, it's going to be capped by the 200. That's the 200 daily in gold. But a little bit more room, that should put some additional pressure on commodities, gold, and crude oil for that matter. And remember, we have a change in Fed policy now that they're going to start raising rates. And when you have an interest rate rising environment, you have to be careful because it does put some downside pressure in the commodity sector. Okay, so just keep that in mind. So yes, I do think it has a little bit more room left. And if they really start to raise rates, the dollar could even start to take off even more. So there's something to think about here. All right, but yeah, the dollar has additional movement. More move on the horizon. All right, let's take a look at the bullish percent gold miners index. And as you can see here, we also talked about how extreme we were. That's another, with the commitment to trade reports, an extreme bullish percent. You could see every time it hit here, this area, it sold off. And look what happened. We blasted right through it up to the 80, 90. And remember, guys, every time when you hear gold commercials coming on CNBC and Bloomberg, and they're talking about you got to buy gold, you got to own it, you know that there's some sort of a local top in place. And I mentioned many, many times, please don't chase. There's no reason to chase this because it will come in. Like any other stock or sector, it's going to give you another opportunity, a better buying opportunity. All right, so let's take a look at the weekly. We had a rising upward channel. We reached that pretty hard. We just broke the 200. I'm sorry, we broke the 20 in gold weekly. So we could get down to 1159 here, which is the 50-week moving average. It's very well possible, guys. We're at 12 now, I think 12 and change. But it could easily sell off down to the 50-day moving average. I'm going to show that to you in a couple of different charts here. All right, here's the Huey Gold Bug Index, and as you can see, the 20-week Huey is right here at 176. That should be really the next target, and it coincides nicely with some nice support here. Okay, right into the 160-ish area, and here's your big band here. You're going to have your band of support right into the 160, 180, which will coincide nicely with that 20-week moving average. All right, now let's take a look at the gold contract, because I got a lot of mentions on the gold contract as well for the subscribers. So let's take a look at that. And you could see here on gold, logical spot is 1176, which is the 50% retracement from the low to high. Now, it could overshoot and go much lower, guys. I just want you to be aware of that. But if it holds 1200, which is a 38%, these are the three areas here are the targets that 1150. You got this target right up in this area here, and you got 1200 needs to hold big time. Now, look at the. We're not really quite. We're getting oversold in the RSI and in the MACD. I like to see a flush down to here hard. A lot of volume. That'll capitulate all the week longs, and I suspect that gold future would start to rally back up again, creating an excellent buying opportunity. But usually, in a seasonality, if you notice, if you play seasonality trends, gold usually bottoms late June and July. So there's plenty of room to run to the downside. Now, I'm not saying that, gold's just going to continue to go down until June, July. No, we'll probably have a couple of pops here and there, and then we should have a move lower, at least one more capitulatory low. And then that would be, again, anywhere from here, from these guys here, from the 38.50 or 61.8% retracement. And that's on gold, okay, the gold future contract, all right? Let's take a look at the GLD. Now, I mentioned in the videos, 38% would be the first target, 50 is 112, and 61.8% retracement is 109.34. And I think that would be extreme, a real extreme capitulatory low. If it really shuck everybody out. But I honestly think that we're probably going to get anywhere from the 38 or to the 50% retracement at 112, 112.13 or 114.92 where we are right now. And this area is going to need to hold. This has to hold. If this does not hold, you're going to see a real big sell-off happen. And I've seen gold sell off 50 to 70 points in a day. And believe me, if you don't think it could do it again, it can. Especially now when you have a change in trend here. All right. So keep an eye on GLD. These are still downside targets. First downside target was met. We're looking at the 50, now the 61.8% retracement. All right. Let's take a look at silver. And these are the other two potential targets. I mentioned that also 38.2%. We also got the 50 and the 61.8% retrace. These are the other two potential targets in silver. Okay. And then I think silver will actually be a really, really good buy. Actually, will give you more bang for your buck than the gold contract as well. But something, again, that's your choice as in what you guys trade. All right, now let's take a look at Nugget. And here's a triple, 3-time. And Nugget is at its 50% already, guys. All right, we met two downside targets already. I still think Nugget can actually go down a little bit more. All right. And with a triple, you can flush way down into the 60s and 50s. So I think Nugget has a little bit more room to the downside. So we met two targets already, but I'd start looking for some sort of a base building and see if Nugget and gold actually obviously holds in at these areas. Because you could see here it held the 50% retracement pretty much all week. And you could see we'll continue making lower lows and lower highs in MACD and RSI. So again, this is going to be a critical area. I would look at the low of 67.40, and if you are going to trade it to the long side, if it takes out that low from 3 trading days ago, I'd say look out below. You're going to definitely come into the zone area here. Okay. All right. Now let's take a look at GDX. All right. Since it is a triple ETF, let's take a look at the GDX itself. All right. And you can see here, it basically didn't even hit its downside target yet in GDX. So it's 38%. It's 2095. Really, really big support area is going to be here at, well, let me just get that. Let me get a pen. It's going to be 19. This is going to be really the big, big, big support. I think if it loses 20, or actually 21, excuse me, if it loses 20, 21, that's at 38 right now. I think you're going to see a flush into the 20 and then 19. And then 18 would be the extreme. All right, and you can see here we have thin zone. So if it needs to hold this, it's going to need the big line in the sand is going to be that 1773. Because if it does not hold, you're going to have this thin zone. It'll go all the way back down to this area here. I've seen it happen before, guys. I don't think it's going to happen, but I've seen it happen before. Remember, commodities always and usually always overshoots, as well as the Forex markets. So it could be extreme. And when you get to these highs, you could see the big volatility in these candles from base here. It just shot right up, and they could do the same to the downside. All right, so GDX downside targets, like I said, 38.20, 95. 50% here coming in at 19 and 61.8 at 1773.